Welcome to Security Token Stories, brought to you by Security Token Academy, the leading educational platform dedicated to covering and facilitating the security token industry. I'm Derek Edward-Schloss, Director of Strategy at Security Token Academy. Coming up on today's episode, we have Dave Hendricks of Vertalo, a blockchain-agnostic cap table solutions company for security tokens. Vertalo aims to connect all major players within the security token ecosystem by building what it calls the operating system for digital securities. In this conversation, we talk about Vertalo's origin story, why partnerships are so fundamental to the Vertalo team and technology, digital asset self-sovereignty, and connecting investors to downstream sources of secondary liquidity, along with its real estate partnership with Prime Trust. As always, I'd like to quickly mention that the law as it relates to blockchain-based instruments and assets is still a work in progress by regulators and legislators around the world. STA considers the information in this podcast to be of interest to our listeners, but we make no representation as to how or whether any assets or projects discussed on the podcast fit into any regulatory system. The information discussed in this episode is purely educational and not investment advice. One final note, as you listen to the episode today, we'd be grateful if you could take 30 seconds to leave us a 5-star review wherever you're listening to the podcast and share out the episode with your friends and professional network. These reviews are a major part of how our content gets discovered each week by new listeners. And if you share the episode out on social media, tag Security Token Academy and our team will make sure to say thanks. Now, on to this episode of Security Token Stories. Dave, welcome to Security Token Stories.
Hey, Derek, how are you? Great to hear from you.
You know, I've had a chance to sit down with you before and learn about your career and your previous ventures in tech. You're a seasoned startup veteran at this point with a ton of corporate experience as well. Why don't we start off and kind of kick off the conversation with a quick 2-minute background on your professional career up through 2016, 2017, when you first decided to jump full-time into the blockchain space?
Yeah, so I got into computers really early in my life. When I was in high school, I started programming, and in college, I studied political science. But I really spent a lot of time on computers, and I worked in the education department during the Reagan administration. So a long time ago, I programmed FEMA computers, and coming out of college with a political science degree, the only marketable thing I had going for me was my computer skills. So I got hired by Arthur Andersen, the large accounting firm, to roll out computers for all these auditors and accountants that were around the country. So I did that for a couple of years, and this is before the internet. This is like the early age of networking. It was pre-AOL, so you had spreadsheets and some word processors. So I got into that. I became a computer consultant for Arthur Andersen, advising their clients. And then I left to join a company called J.E. Robert, a client of Arthur Andersen's that was doing real estate securitization. So I learned a lot about securitizing real estate, working on the Resolution Trust Corporation's workout after the S&L loan crisis in 1993. That was interesting. And I did that for a little while. And then I went on to work for Oracle Corporation. At Oracle, the large database company, at that point it was mostly databases, I ran the worldwide relationship between Arthur Andersen and Oracle. So I got a lot of experience in building kind of channel partnerships, ways to extend a company's reach beyond its own sales force using kind of favorable partners to, distribute technology and techniques. That was interesting. I did that for 3 or 4 years. And then I got into internet marketing via email. I joined my Oracle boss, and we went over to an email company in Boulder, Colorado, and I got into email marketing. Email marketing is super interesting because it's, again, data-based marketing. It's very data intensive, and it's got a lot of identity elements. I worked in the email industry for about 15 years or so. Co-founded a company called Live Intent, where we invented programmatic advertising in email. And then in 2016, my two co-founders, Scout Tom Goodrall and William Bagster, respectively the general counsel and the CTO, we got together while I was living in London, where I had moved the family to expand live intent, and we started working on some problems around due diligence. And in 2017, we formally incorporated Series X, the parent company of Vertalo, and we started working on our first project, which was a distributed ledger for human capital data. That was a really interesting problem that we thought, and it came out of a diligence problem that we had at Live Intent. Well, we built that, and then in the summer of 2017, I was watching everybody run ICOs. And we thought, wow, we're building a distributed ledger platform. Why don't we write a white paper and use an ICO type process to raise money against it? Well, that sounded like a good idea until I talked to Gautam, my co-founder, who's a securities lawyer and who was formerly at the SEC. He looked at this. He said, "Oh, there's no way that we can raise money using an ICO. We need to raise on a Reg D, but we can tokenize it." So in October of 2017, we started working on a security token offering for what was then called Series X, but with the help of Deloitte and Lowenstein Sandler, our law firm, we spun out a Cayman entity that we called Vertalo. In March of 2018, we issued tokens to 53 investors out of that Cayman-based company. The thing was that we couldn't find anyone to help us. So we had to write all of our own smart contracts and all this other technology. When I saw this, and after I'd read everyone's white papers, I said, wow, there's a major gap in this market. We saw a lot of companies like Polymath that were building tokenization platforms. You could create a token, a so-called security token. We saw that there was a lot of investment in exchanges, companies like T0 and Open Finance. And we thought, wow, that's great. So you can build a token and you can buy and sell a token. But what do you do when you're not building a token or buying and selling a token? What happens to the tokens? I thought, wow, there's a huge hole in the marketplace. And that hole was really who was going to manage the ownership data related to those security tokens. And to me, that looked like a cap table. I was a corporate secretary for a long time. I've raised a lot of money, dealt with a lot of cap tables. I said, hey, look, if these security tokens are equities, they're going to need a cap table. And there was no cap table on the market certainly not one that could handle tokens that would connect to issuers and exchanges. So in May of 2018, we took the technology that we had built for our own issuance and we started productizing it and turning it into the Vertalo of today, which is a digital transfer agent that connects and enables all of the participants in the digital asset ecosystem. So that's kind of how we got to where we are.
Dave, I've been tracking the evolution of the industry for a few years now, and I have to say there's more activity and traction today in January 2020 than there's ever been. And when I look out across the landscape, and we've just talked a little bit about this, there's a number of problems that projects are aiming to solve. There's broker-dealers like Watchdog Capital and Texture Capital. There's issuance platforms, you've named a few of them. There's folks like Tokensoft and Polymath and Harbor. There's back-end custody solutions like Prime Trust, ATS, and trading platforms like Open Finance and T0. How do you see Vertalo solving problems in this space over time? Where are you hoping to fit? How would you distinguish yourself from the rest of the ecosystem? And then, zooming in, what are some of those tools that you're building for issuers and investors to solve those problems?
What you just highlighted there is the variety and the number of participants that are in this space today. In order to execute a so-called security token offering or a digital asset tokenization, there are 3, 4, 5, 6 players in each of these deals. And there's no such thing in this space as an end-to-end player. It's just Not there's no one who's going to be a token issuance platform and a broker dealer and an ATS and a custodian. And the reason for that it's functional, and to a greater extent, it's legal and structural. It's just almost impossible to be all of these things. The team at Vertalo has been informed by our previous experiences, and with a co-founder who's a PhD in math who builds huge scaling systems, another co-founder who's a former SEC attorney, and a CEO and co-founder who builds products for massive scaling products in interactive markets. We saw that there was a huge data management play, if you want to put it that way. And we thought that all of these players in this ecosystem needed to be connected through some sort of API or set of APIs. And so we always saw ourselves from the very, very beginning, not necessarily as replacing anybody, but really more as connecting everybody. Our initial, kind of launch mission was to bridge the gap between primary issuance and secondary trading. But that's only one of the chasms that needs to be crossed. There's the connection to custodians. That's very, very important. How do you custody assets when they're not being traded? How do you raise the money to begin with? So how do you connect to broker dealers and capital formation agents? How do you connect to identity and accreditation services, in KYC and AML? How do you connect issuers to investors so that that relationship, which is the most important relationship in this entire equation, how do you connect them so that you can comply with with existing securities laws? So as a team, a cross-functional founding team, we took our experience in regulated markets and building database technology platforms and, in kind of corporate finance. And we said, there's a role for a company to be a transfer agent, to be a steward, to be a facilitator of data exchange and data transmission between all these players. And that's the role that we set out to play. And it's a role that we're really kind of purpose built for professionally and also kind of temperamentally. We're all connectors. I would rather partner than compete, because you see this industry. It's got lots of folks that are hard to distinguish from the outside, but when you're in the industry, you understand they all have specific kind of different takes on things. And they all bring something special to the equation. I just thought that a business model where we could help issuers and investors manage data on chain, and to help them be compliant with laws, that would be a very, very sticky business model. So, and because we have all those connections, it enables us to grow our business in ways that are demand driven based on what the market needs. And it's hard to build, I'll tell you. If you're just building something for yourself and just for your clients, it's a lot easier to build than when you're trying to build something in partnership and cooperatively with other parties who may have different goals than you. But it's very rewarding.
If I have this correctly, Dave, through Vertalo's interface and APIs, Vertalo is aiming to connect all of these various participants in the ecosystem. And the idea is that these issuers and investors are the long tail users of the Vertalo platform. You're going to help them manage, and you're going to be kind of that relationship provider between those two parties, issuers and investors. And investors will be able to kind of sovereignly own and hold their own security tokens, and that will be abstracted by the Vertalo interface. Do I have that?
Yeah, you're mostly, I would say, 98% correct. The difference, I would say that if I want to put a fine point on a couple of things, we introduced a couple of pretty important, I don't know if they're features or benefits this year. One of them was keyless custodial wallets. Um, the biggest impediment to the adoption of, well, there's two big impediments, but the technical impediment to adoption is expertise. The security tokens as a thing are not going to get embraced widely as long as they require technical expertise to own and to trade. So, for example, requiring the use of MetaMask to sovereignly own your own tokens, that is a nerd thing.
MetaMask is certainly a love hate tool. I'm with you.
Look, it works, okay, but it's not a trading interface. It's really easy to lose. It's really hard to use. It's not a metaphor that anyone understands. And so I applaud the MetaMask team for having built something, but MetaMask is kind of the dial-up modem of the token world. I got my start in pre AOL internet, and it was the internet before AOL and Prodigy was inaccessible. It wasn't until AOL and Prodigy came along and they put a better, cleaner face. They dialed the modem for you. You didn't need to know what a modem was. And eventually there was no modem because it just happened over IP. Once that happened, the floodgates opened. We are still in the MetaMask era, where knowing how to use MetaMask is a precondition to buying security tokens on many platforms and from many issuers. That's got to go. And so, what we want, and we enable issuers and investors to store tokens in MetaMask or in a Tezos formatted wallet or anything else like that. But in order to make it easier, we also enable issuers to issue tokens to keyless custodial wallets that we spawn for investors. What this does is it takes the presentation of the wallet out of the fundraising process and out of the initial kind of investor interaction process. Once tokens have been distributed through this mechanism, the investor can bring their own MetaMask or Tezos compatible wallet to their account in Vertalo, and then they can transfer the tokens to that wallet, provided that they can prove that they own and control that wallet. So it's a pretty big innovation, frankly, compared to what most folks are used to in dealing with token holdings. And so our interface just allows them to see their holdings like you'd see in Coinbase, or like that. And they don't have to know about tokens. They don't need to know about wallets. If they're savvy enough, they can go ahead and use a self-sovereign wallet. But there's really no reason to. With our work with ATSs like Open Finance, our technology will be connecting to ATSs like them without the user really knowing that a wallet is part of the picture.
Since we're on the topic, Dave, I'd love to explore how you're thinking about the secondary trading piece. So providing these investors with access to downstream sources of liquidity through places like Open Finance and T0. I've seen an early demonstration of the platform. Maybe you can walk through this secondary trading piece in detail for our listeners. How might this work for investors looking to move in and out of positions using Vertalo? And what are some of the guiding principles that your team is thinking about as you build out this feature?
Well, so I think we'd start at Vertalo is a set of APIs. The app that is Vertalo is really a reference app on top of the Vertalo platform, which is itself a set of APIs. This reference app enables issuers and investors to manage their stakeholder data. So that means that in Vertalo, as a user, Derek can log into Vertalo and you could see every single security token that you own, whether it was issued by Vertalo or by another token issuance type of provider. First of all, we believe that visualization and interfaces are very important. While we're talking about interfaces, our point of view is that APIs and interfaces are very, very important between systems. So our team has been working very, very hard for a long time to make it very easy to connect from the Vertalo system to external systems like Open Finance, and that's all achieved by APIs. So when you log into your Vertalo system, you see the assets that you own, analog or digital, because we can handle both analog and digital assets. And if those are tradable, there's a button that says Markets next to your holding. That Markets button next to that individual issuance or holding really represents an API. So when you click that Markets button, it fires off an API that takes you to the listing ATS or exchange where that security or token, whatever you want to call it, can be traded. What we don't want is for people to have to go and search for these things. First of all, most of these security tokens or digital assets are going to ultimately trade on a single ATS or exchange, because without that, there's not enough density. And because of securities regulations, there are issues with allowing the free trading of these things. So our view is that it's hard enough to make a private asset more liquid. Don't make it harder by making it into like a treasure hunt for the investors, for them to go and find the place to buy and sell this. So our system, through APIs, knits together the issuer and the investor. That is the cap table. It connects the investor and their keyless custodial or self-sovereign wallets to the listing exchanges or ATSs, and then it connects those issuers and those investors to custodial services as well. And that's all done via APIs. Now, the difference between our system and other systems in the market is that we didn't start as a token issuance platform and kind of bolt this on later. We started as a data management platform, and then we got into the business of tokenizing things when we found out how easy it is to actually tokenize things. So, it became natural for us after we worked on the management of the data to move over to tokenization as well.
Dave, as part of your role, acting as this long-term partner and managing the long-term relationship between issuer and investor on the Vertalo platform, I think this idea ties really neatly into Vertalo's recent SEC registration as a transfer agent, which you mentioned a few minutes ago. Today transfer agents typically act as a required intermediary between issuers and shareholders. They help with things like keeping historical information accurate in case it's requested by regulators or issuers. They help with, issuing dividends and interest payments, streamlining voting, things like redemptions and transfers. How do you think about the role of transfer agents, and why is this transfer agent registration so important for a platform like Vertalo? And then on top of that, how do you imagine the transfer agent role might evolve over time in light of the fact that we now have this new ledger technology that really solves some of the previous kind of role and jobs of transfer agents here in the U.S.?
Well, as a data management platform, first, being a transfer agent made a lot of sense for us. It wasn't a stretch for us to do this. And as a company that manages cap tables and stakeholder and investor relations, it wasn't a big reach for us to do this. We started thinking about becoming a transfer agent in like mid 2018. We didn't get around to it until it looked like the SEC wanted everyone to become a transfer agent. And so we said, okay, well, it's not hard for us to qualify because, we are effectively performing all of those things. It made sense for us to do this too, because we deal with analog assets and cap tables, not just so-called tokens. Where, is the market going to change to adapt to us, or are we adapting? Are we changing to adapt to the market? I don't think that the SEC or FINRA are going to substantively change regulations or their approach to enforcement because a couple of people want to create an electronic instrument for exchange of value. It's just not, that's not compelling enough for them to want to change their rules. So they don't see any reason why they need to collapse the current structure and eliminate the roles that are played today, the broker-dealer role, the transfer agent role, the ATS role, et cetera. So we don't see any of those things going away. What we do see are maybe slight changes in what is considered to be an acceptable database of record. Is it a spreadsheet? Is it paper? Is it on-chain records? What's the most trusted source of data? That may change over time. Today they trust the output in the form of a spreadsheet more than they trust the confirmations on 1,000 distributed nodes. Okay, I mean that's just where it is today. But that may change. We're not really concerned about that because that's really easy to comply with. And performing the day-to-day business of a transfer agent is actually really easy for us because we didn't try to program it into a token or anything like that. We had already designed our system as database first, not token first. So managing issuer and investor data and being able to format it and output it and communicate between issuers and investors, that was always kind of table stakes for us. But it's a great business for us because, stock transfer, the DTCC is a huge business. Computer share is a huge business. There are gigantic analog businesses in this space that are either going to acquire companies like mine, compete with companies like mine, or lose to companies like mine. So Vertalo is very well positioned to move into adjacent spaces, even managing analog data while using blockchain as its database. Because that's ultimately the way you need to think about us, is that we do a bunch of things that have always been done. We just happen to use blockchain as the database because blockchain is a really, really resilient method for data storage. It's slow, but it's not slower than the existing market, the current private markets, which are snail pace.
One of the bigger pieces of news for Vertalo in 2019 was the announcement of your partnership with Prime Trust and the Treats platform. I actually had Jimmy Bingham from Prime Trust on the podcast a few episodes back, and he did an awesome job walking me through the private REIT opportunity and why his team at Prime Trust is so excited about upgrading the real estate industry. Dave, what can you tell me about the private REIT industry today as it relates to Vertalo? Why is your team so excited and bullish on the tokenization of real estate and private REITs? Is the industry still running on spreadsheets and fax machines. Why are security tokens and the work Prime Trust and Vertalo are doing on this such a 0-to-1 transformation in the way this industry is moving today?
Well, if there's anything that moves more slowly than a paper certificate, it's an immovable object like a building. The real estate is a really, really slow market. But it's huge. There hasn't been any great reason in the past for people to change their fund management practices at REITs, other than pressure from investors and other investment options. Vertalo and Prime Trust and the other folks who are involved in this see a huge opportunity to reduce the cost of REIT fund administration and to improve the liquidity for private REIT assets and other similar asset classes. Right now, the REITs are kind of saddled with antiquated data management processes. It takes them a long time to perform transfers. Facilitating a sale of a private share in a private REIT is onerous and time consuming. The general illiquidity of private REITs causes them to be hard to buy and harder to sell. And that difficulty in transacting results in an illiquidity discount. It's our belief that digital asset tokenization offers perhaps the biggest benefit when it's applied to making illiquid assets more liquid. And if you can make shares in a private REIT easier to buy and sell, that means that you might get more buyers. That means that people might be able to get out of positions more easily to invest in other areas. But it also means something else. And what I'm really excited about actually is using smart contracts to collateralize interests in REITs. Imagine instead of selling those shares in those REITs that you have, instead of that, do something like MakerDAO, collateralize your holdings and by using smart contracts. So you hold the interest in the REIT in the form of a smart contract. And then instead of selling it and taking the tax hit, what you do instead is you borrow against it and you use a smart contract to assign part of your ownership in your dividend stream to a third party. That is something that I'm super interested in. And the Treats platform is mostly focused on process improvement and generating efficiencies in fund administration and generating improved liquidity. But the next thing that we can do after we kind of get this going is to really start to innovate around how some of these assets could be collateralized so that people wouldn't have to sell necessarily, but they might be able to borrow against some of their positions instead. And so Prime Trust as a custodian is a great partner to work with in this respect. And we've been working on this project for quite some time now. And I think, there's been some kind of announcements that kind of came out and jumped the gun recently, but I think we'll probably announce the real launch of the Treats platform sometime either later this month in January or in February with some inaugural clients. But it's real estate's the biggest asset class in the world. If you want to go to a place and pull out some inefficiencies, that's probably a great place to start. And digital assets are great for that.
Yeah, it's a great answer. Dave, a lot of progress made in 2019 across the industry, but I don't think that you would know that just by leafing through the coverage for security tokens across the space this last year. You had this great Twitter thread recently where you wrote, do not confuse quiet or low trading volumes with lack of interest. The development of digital securities infrastructure is a lot more like biotech than it is iPhone apps or DTC platforms. Dave, can you unpack this analogy a bit for the audience? In your mind, why is the security token infrastructure build out? Why is that, parallel stronger to something like biotech rather than consumer? And what does this mean for how we should be thinking about and evaluating the traction that's happening in this space now that 2020 is underway?
Well, thanks for reading my Twitter stream. I appreciate that. So my comparison to of the development of the digital securities industry to biotech has come out of my personal experience of seeing the convergence of business, regulation, and technology that we see in digital assets. The typical time that it takes to bring a drug to market by a pharmaceutical company is something like 9 to 11 years. It requires a tremendous amount of upfront investment. Things need to go through clinical trials. There are regulators. There's marketing. There's patents. There are a lot of moving parts, and they typically and ordinarily go through a similar process for each drug, and it's high risk, it's high investment, and then it's high payoff. But it's not something that you can do. You can't just release a new drug for plaque psoriasis in a year or two. First, you've got to find the compounds for the solution, and then you have to go through all these processes. It's not a lot different with digital assets. I mean, this really started in 2009, and in 2009, Bitcoin essentially created penicillin. They created a cure to inflation and to poor monetary policy. It took a long time to get to the creation of Bitcoin. There were some fits and starts before that, and the product that came to market was informed by those. Right after that, after Bitcoin, which was a very, very successful release of a solution to a problem, you can call it an illness if you want, we started seeing a lot of snake oil come out. And you saw the snake oil in most of these altcoins, so not all of them, which were being peddled by people with dubious claims to cure all kinds of problems, etc. But those snake oil solutions that are so many of these ICOs, they avoided the hard work and the interaction with regulators and the testing, etc. And they came and went very, very quickly. Those of us who eschewed the ICO route, we went back to the pharmaceutical route of identifying a problem and then coming up with solutions for those problems and then testing them and then working with regulators like the responsible parties in this space are doing. Today, I would say that the security token industry or digital assets industry, and the part that I'm in, and the part that we talk about, you and me, Derek, is really in the clinical trials and the regulator phase. We're busy working with clients that are very, very similar in many cases to, and this is, take this the right way, they're like lab rats. We find that a lot that we're testing hypotheses on various issuers, some of whom are viable and some of whom aren't. We're figuring out how our technology works with them and works within regulatory frameworks. We take these results of these kinds of pilot tests that we do, and we share them with regulators, and then we make some adjustments. And then while we're doing this, we're figuring out how we market these things to a wider audience that is waiting for us to go through these clinical trials, who's waiting to find out whether we have passed regulatory scrutiny. Once we've gone through the clinical trials and we've gone through the regulatory scrutiny, then we're going to get to the point where we can market this and say, yes, this is a cure for lack of liquidity. Yes, this is a cure for high costs of fund administration. Yeah, this is a cure for fundraising or for other various problems. But it's not, it's not, people thought, oh, and there's all this excitement in 2018 about security tokens, and it was a little bit exaggerated. And then everyone thought, oh, 2019 is going to be big. Well, no, the teams that were working had to go through clinical trials, and we have had to work with the regulators. And as we get through this, then we can go and we can market these things to the skeptics who don't want to be guinea pigs. So that's kind of the way I see this market.
Yeah, terrific analogy, Dave. I've really enjoyed this conversation. Where can people learn more about Vertalo, what you're working on, and how can they reach you, Dave, if they'd like to learn more? I know you're fairly active on both Twitter and Telegram.
Yeah, I'm super easy to find on Twitter at Dave Hendricks on Twitter, and if you're on Telegram, you can just look for me there. And always reachable at info@vertalo.com, and heads down in Austin. So if any of your listeners or readers are ever in Austin, Texas, and they ever want to say hello, I'd love to introduce them to the team. But always thankful for your questions and for your support of the security token industry. And thank you for taking the time to interview me today. I really appreciate it, Derek.
Absolutely, David. Next time I'm in Austin, I'll let you know and swing by the office. Thanks for joining me on Security Token Stories. That's it for this week's episode of Security Token Stories. For more security token content, visit us online at securitytokenacademy.com and subscribe to our newsletter, The Security Token Edge, which lands in your mailbox each weekend. You can also keep up with the latest security token news by following us on Twitter, Telegram, YouTube, Facebook, and Medium. Before we go, a big thank you to Security Token Academy's Platinum and Gold corporate members who make this podcast possible. You can learn more about Security Token Academy's corporate members at securitytokenacademy.com. I'm Derek Edward Schloss. From all of us here at Security Token Academy, thanks for listening.
Security Token Academy does not provide investment or legal advice. We are not a registered broker-dealer or investment advisor. Opinions expressed in this podcast are the speaker's own and do not necessarily reflect the views of Security Token Academy. More information can be found on our website at securitytokenacademy.com.